Hey guys, the last video, because I made a couple of live shows, it's been a while that I made a video just like this, and but the video was about did I make a mistake investing, selling my calls, Tesla calls mainly, and locking in that profit, and then later buying oil tankers, and I said no, because I didn't want to take the risk of leaving my profits in those Tesla calls, and and the risk was too high to lose it all again. And even if I would like sell half and keep half, I didn't want to take the risk with the remaining half to lose that all, to have a chance to lose that, even if it's a small chance to lose that, let's say 20-30%. I said, then I don't want to take that risk. I rather sell it, because investing with options and calls or puts is much more risky than investing with just like in stocks, and and similar to investing with margin, borrowed money is much more risky than investing with your own money, and so you should lock in profits faster. But yeah, Tesla continued to go up, and it was around $800 that I sold those calls. Those were $1,000 calls by September, and the value I sold them was about $80 or so, and I bought them for about $15. So I made a 4x, 5x. I was very happy with that. But now the price of Tesla has gone up to $1,200. So what's the current value of those calls? It's not $80, it's at least $200, because that's what you can get. But they could go up a lot more. If Tesla by September goes to $2,000, then the value of those calls is $1,000. I sold them for $80, but they can go up to $1,000. So I realized that I made a big mistake, and it's been a while that I made a big mistake like this, but I did. So why did I make a big mistake? Because I invested in something at 100x potential. I knew that. I invested in those calls when Tesla had dropped from $900 to about $400. I bought those calls at $15. At that time, that was 3 months ago, during the Corona crash, the market thought it was extremely unlikely that Tesla would be above $1,000 in half a year's time again. That's why the calls were so cheap. It was only $15. And I knew that, wow, I mean, actually, that it was actually likely that Tesla, maybe not by September, but at least in this year, 2020, would breach its all-time high of $900, and had a very good chance to make a new all-time high, a lot higher, top out around $2,000. I made a video about that, several videos. Check my YouTube channel. But one video was really well done about Tesla, and that's where I show, where I plot the logarithmic regression of Tesla price history, which goes 10 years back, and where I show that if you look at overvaluation and undervaluation of the price versus its past growth, that very likely we will go in this bubble to a similar overvaluation as we've seen in the first bubble of Tesla, when it shot up from $10 to basically $300 in a half a year's time, or a year's time. No, it was from $30 to $300. That was the previous bubble. That's already 5-6 years ago. 6 years actually ago that happened, and then it went sideways for 6 years. But something similar was happening now, and though the coronavirus took a big, I put that on hold, as all stocks collapsed, Tesla too. But it was clearly like not at the peak of the bubble was not reached. Peak of the bubble, meaning just like in crypto and so many investments or real estate, the peak of the bubble is usually achieved when you have similar overvaluations as in previous bubbles, which was not the case. But also, if you look at the logarithmic regression, check that video, I'll post the link below. But also, like, the psychological sentiment is a very good indicator to judge whether you're peaking out or not. What you want to see is euphoria. Then you're at the peak, likely. But in case of Tesla, there was never an euphoria, and even not at $900 before it collapsed to 400. There was no euphoria. There were still a lot of bears in the market. There was the short position on the stock was still very high, and the doubt about the stock was still very high, and the reports in the mass media was still, like, certainly not euphoric, and so all these things indicated that the top was not reached. So should I have sold my full position of those calls? No, I should not have done that, because I invested consciously for 100x, and or let's say 50x, and I sold it at, let's say, 5x. Big mistake. And it happens so much in the crypto world. Actually, I've done the same mistake there also many years ago, and it's all feeling good when you lock in a profit, but it starts to feel really bad as prices go up higher and you realize you could have earned a lot more. Then you start to really feel the pain of missed opportunity, and the pain of missed opportunity is very similar to the pain of actually losing money. And I've developed a investment strategy that tries to avoid the loss of opportunity, the pain that you feel by selling too soon, by judging the market cycle, by judging where you're at the bottom of the bear or the top of the bull, and trying to buy at the bottom and sell at the top. With crypto, I've done that very well, developing a model, the Trollo chart, where I really have a good guidance to try to remain invested until we reach serious overvaluation. And I had even developed a same model for Tesla, but I just ignored my own model that I developed, and it's costing me a lot today in missed opportunity. So it's a good reminder for me to not make the same mistake with crypto, because this is likely the next thing that I will be able to ride a bull market that goes way higher than a reasonable person expects. But if you have the Trollo chart, you should it will help a lot to stay put, to sit on your investment. And I hope my painful lesson is helpful to you, because many people that follow me have not followed me in the previous crypto cycle, but it was the same story there. So many people sell way too soon, and I mean, it's very understandable. Like, you look at crypto in general, or Bitcoin Cash in particular, for example, it's still at $200. I mean, it reached $200 a year and a half ago. It came from $4,000 at the peak 3 years ago, drops to $200. It's still at $200 today, and 1 year and a half later. Almost everybody's sitting on serious losses there. So the moment it starts to pump, goes to 400, 600, people start to lock in profits, because that was a very painful period, and they want to have some security. But it's really, it feels good at first, and then it starts to feel really, really bad, because it goes to 10,000, 2,000, 3,000, 4,000, 5,000, and you start to hit yourself on the head because you sold at 1,000 and it's now at 5,000 a year later. So, and likely, since Bitcoin Cash reached already 4,000 3 years at the peak of previous bubble. And I did this, the model, you can see my Google Sheets. It's likely to go to $10,000, and it could even go higher, but that's actually likely for the next peak. So you sell at 1,000, you think like, wow, I doubled my money, great. Well, it goes 10 times higher in only 1 year after. So This is something that I've learned in crypto very well, but in the stock market I fail to really to implement. There's something other that's very important here, and that's of course, is my model of investing correct? So the way I invest is I use the Kelly criterion to decide, to judge the risk reward. How much can it go up, how much can it go down, and what are the chances for it to go up to that price from today, and the chances for it to go down first to that other lower target price from today. And based on that you can calculate how much you should allocate using the Kelly formula. But then the question is, once you did that, for example, I just recently did that with oil tankers, invest about 40%, 35% in oil tankers following the Kelly criterion. But should you then, let's say it's a success and it goes up, doubles, triples, should you again calculate how much you should allocate to this investment? And I'm not sure about that actually. I might be wrong there, but what I think is that no, you should not rebalance. So the if you invest for a 10x or a 100x in a certain investment, should you sell at a 2x a piece? Well, you can certainly make a strong case for it because the risk has gone up. The moment prices go up, the risk goes up too, that it will go down again. And the potential reward is also going down. As prices move up, the potential reward remaining goes down. So, if you do the Kelly formula calculation, yes, Kelly will suggest to have actually a lower allocation than you had before. But because it has gone up, your allocation is actually higher. So, if you redo the calculation, Kelly will dictate you to sell off a piece of your investment. But how can you achieve a 10x then or a 100x? You can't, at least not for your full investment, no. And actually, if you follow this consistently, you will have very, very few of your coins or of your stocks remaining when you reach that potential that you set at the beginning of 10x or 100x. When you finally reach that, but you have been balancing all the time out of that investment to reduce risk and lock in profits, the amount of coins or the amount of stocks you have remaining that actually did that 10x or did that 100x is very low. So that's why I think you should not rebalance and you should keep it invested. Okay, you can like cheat a little. You can buy a small thing from it. You can sell maybe like 1% or 5% or 10%, just to have that minimal security locked in. But in order to make a killing, you should absolutely try to keep as much as possible invested. And that's extremely difficult because the stress levels do go up, because you do realize that all the gains you made, you can lose again as long as you don't lock any profits. So it is a very difficult to hold a 10x or a 100x. And also like 99% of people are very dishonest about their investment returns and what they did. Like, just like they will share with you the one investment that they made and was a success. And for example, they invested in Apple at the time when it was cheap, or Google when it was cheap, or Bitcoin when it was cheap. And that may be true, but they don't share all the other investments they invested in that was a failure. And they certainly also don't share how much they actually invested of their portfolio and how much they kept invested. But all these things are crucial to judge whether they are actually a good investor or not, because you can invest early in Bitcoin and still have not made anything. Like most people did, that invested early in Bitcoin. They sold for a 2 weeks or maybe a 10x, and they bought some stupid stuff with it, and they are full of regrets today. So that's why the first thing I share about my work is my compound annual growth rate of my portfolio, which is the end result of all your decisions. What's your average return per year, and since when? If it's only since 1 year ago or 2 years ago, well, it's a very short time to judge your results. But if it's like 5 years or 10 years that you've been able to reach these average compound returns, then of course that shows, well, your performance, how good you are or how bad you are. And so my compound annual growth rate of 40% is amazing since accounting since 2008, since before the big financial crisis, because that happened in 2008. I'm counting since the 1st of January 2008. Though I was starting to invest a couple of years before that, but I decided to not include that as my returns because I wasn't investing everything yet. But I had everything invested by the 1st of January 2008 because I inherited some money before that. But these great returns I've achieved by looking at myself a lot where I go wrong and try to not repeat a mistake. And that's the value of this video today, because I did again a very big mistake here that costs me a fortune in missed opportunity. I sold something that was 30% of my portfolio completely, 35%, actually no, 40% of my portfolio. I sold it fully, and that's 2 months ago. And by today, if I would have just remained invested, I would have since then doubled or tripled again. And I invested in something that actually did not even go up, did not even stay flat, but dropped a bit, 20 to 30%, as oil tankers. So instead of tripling that 40% in the past 2 months, I actually lost 30%. That's a huge difference in performance. Now, yeah, and the big mistake is that I made is that I should not have it sold all. Yes, you can sell a piece, preferably a small piece, to relieve that stress that you're gonna lose it all again. You can do that, cheat a little, and actually Kelly Criterion actually also says you should lower your allocation. Okay, so you can sell some, but selling everything or selling the majority is a very big capital mistake when you know it is likely to go up a lot more. Or even when you think it's like, okay, maybe it's not likely, but it's still a small chance. Let's say it's not 60% chance, but let's say it's 40% chance that it will go up a lot more. You should not sell everything. It's really not smart. I wish some of you guys would have also warned me, because you see, nobody gave me that feedback. It's also interesting to see that very often when I share, like, I noticed that like the feedback from the people around you, you cannot count on. When you want to be a great investor, you yourself or your best, the voices in your head, or your best advisor, but you have to learn to listen to them. And I ignored a voice in my head, or the voice in my head was really not doing a good job. But what I did was I just didn't check in with myself enough, with my different parts, with my different beliefs, and I just let one part overrule, the part that wanted security, and that believed, oh, the markets, okay, they went up since due to Corona crisis, but it's gonna crash again likely, big mistake, because when you sell an investment for a profit, when you lock in a great investment for a profit, you have a new problem. Not only did I make the mistake to sell this way too soon, I should have maybe do a piece, and maybe invested a piece, but I sold it all, meaning that I have now a new problem to face, which is invested in something else. And there too, you will have to make the right decision again to choose the right investment. That's an extra risk too, because you before found a great investment and you had a great entry. And then selling it for locking in a profit that could go a lot higher, well, you lose actually all that work that you did before. And you have to do it again. And I did it again with oil tankers, and might pan out in the future, but as of today, it didn't. Also I didn't take into account momentum. Yes, I was aware that Tesla was already overvalued. Yes, that's why I also decided to sell it all because it's not. It was fairly valued and going into overvaluation now. But momentum is super important. Yes, oil tankers are a lot cheaper and are much clearly in serious undervaluation, but the momentum is still downwards there, as technical traders will explain you. It's still looking for a bottom. So it's very unlikely you will make their money anytime soon. Whereas with Tesla, it made its bottom 1.5 years ago, in the middle of 2019. 1 year ago. Since then, it's been an upwards momentum, and bubbles go parabolic. They have a parabolic formation. It goes up slow in the beginning, and faster and faster and faster, and towards the end, it goes up hyperbolic. It doubles faster and faster, the price, and so the biggest gains are made at the end, in the fastest time. So also a reason why I should have kept a piece invested in Tesla, because that's where the money would likely be made. And I shared this multiple times that's what my belief is, but still, I sold all these calls. I still have a Tesla investment in stocks. It's about, used to be 20%, now it's gone up, so it's 25 to 30%. So I'm still making money with Tesla, but a lot less than I could have. Yeah, so that's the story. Once you take out money out of an investment, you have to also reinvest it. A new problem, a new challenge, and that's why you should work in steps. Thanks for watching.